Welcome back. And now Old Mutual has reported a solid performance at the halfway mark. The financial services group benefiting from increased shareholder investment returns and maintains a positive growth outlook for the second half after the SARB's rate cut. Old Mutual CFO Casper Troskie joins us now for more on that performance. Thank you so much for your time, Casper. Now talk to me about the story at play during the reporting period, looking at the growth that Old Mutual achieved and what it calls a complex operating environment.
Yes, I think, for the first 6 months, we still saw consumers under significant pressure. We've seen, pressure on disposable income, and that's the key metric that we look at. What's happened now is that we've seen a interest rate cut in September. We've seen, fuel price reducing. We've seen inflation come down, but that hasn't yet transpired fully into consumers' pockets. So we still see elevated persistency, persistency issues. So we are seeing customers lapse their policies still.
Yeah.
That has reduced, but certainly, in the earlier part of the year, we saw customers struggling to actually repay their policies. We also see elevated credit impairments in our credit book early in the year, and we've started seeing that improving now in the last 2 to 3 months.
It's quite interesting because, you talk about that persistency experience. So would you expect that this financial year will be the worst of it, or does it, looking at, history, maybe take some time for the better economic environment to actually filter through to that persistency experience?
Yes, we are expecting a bit of a lag, and we're really hoping for another rate cut later in the year. I think that would really help consumers. And then we should start seeing an improvements in disposable income towards the end of the year, and that's really good for the economy. It's good for our business, and it's good for consumers if we can see, that happening.
Well, of course, one of the key metrics there is what we see in new business. Talk to me about what that looks like, the growth in new business, the value of new business, also the dynamics that you are seeing over there.
So in the period, we saw our value of new business reducing by 8%. And we saw the margin reduce to 2.4%. From 2.6 in the last half year. That's mainly because we wrote a very big corporate deal, and these deals are lumpy in the first half of last year.
Okay.
But we've also seen customers buying more savings products, which are slightly lower margin than our risk products.
All right. I see there. Well, just talking about, you do talk about encouraging signs in South Africa, but still experiencing quite a few headwinds in the Africa regions outside of South Africa. How does that performance look like? Have these headwinds had a material impact on the performance in those regions?
So if you look at the overall profitability, the Africa business still showed growth in profits, but those would have been a lot better if we hadn't seen the impact of the currency. We obviously report in rand, so we have to convert those currencies, and those deteriorated against the rand in the period. So the performance would have been a lot better if we hadn't seen those currency devaluations. We still did see good margins in our Africa business, with life and savings and our asset management business showing very good growth. Our P&C business, or short-term business, also had good profits, but the banking business really struggled mainly due to economic factors.
All right. Well, Casper, let's talk new initiatives. Of course, one of them being OM Bank. Talk to us about the progress that has been made so far, but also the further steps that need to be taken ahead of that anticipated launch in the first quarter of next year.
Yes, so I think the bank builds and the national payments testing and integration testing that we've been doing, that's completely on track. In fact, slightly ahead of schedule. From a technical point, we are where we want to be. We are busy working on fulfilling the Section 17 conditions that obviously the Prudential Authority imposed, and that means that we have to have the full management team and the board in place before we think about launching. So we are busy dealing with that at the moment, and we are looking at then doing a soft launch in the first quarter of next year, and then in a phased approach, expanding the volumes and the offering during the course of next year.
Well, you talk about a soft launch, but there's been quite a hard launch of the two-pot retirement system in South Africa this month. Yeah, still September. Of course, this happened outside of the reporting period. But Casper, can you give us an idea of the kinds of flows that you are seeing right now, and how Old Mutual is navigating the kind of influx of withdrawals from that savings pot?
Yes, we took a very cautious approach because we knew that volumes were going to be very, very big. So we wanted to have a fully digital offering, and that's what we've done. We've made available mainly a digital offering, and we've also used WhatsApp and some of our other Old Mutual channels. So and we used a phased approach. So from the 2nd to 15th of September, we allowed customers to view how big their pots were. We've also asked them to update all their retirement information. And the most important thing is getting your tax affairs up to date, because you can't withdraw money unless you get a tax directive. So all of that we got in place. So then we've opened up our withdrawal capability from the 16th of December, and we've received more than 125,000 withdrawals with a value of to 1.7 million. And we'll be starting to process those claims as soon as we've got the tax directives from SARS.
All right. Well, thank you so much for your time and just giving us insights on those numbers that came out from Old Mutual earlier on today, but also what you have seen there when it comes to the withdrawal from the savings pot out of the two-pot retirement system. That was Casper Troskie, CFO for Old Mutual.